It suddenly seems like SOFI is back from the brink of despair after bouncing off $14 all the way back to $17. Many people are saying that SOFI is back. However, the fact of the matter is that if we take a look at the company, nothing has fundamentally changed. And between $14 and $17, the only thing that has changed so far is the price. Now, in my previous video, we actually explored how using management's own guidance and own expectations, which many people actually consider to be overly conservative, that it is actually still possible for SOFI to achieve their price target of $25 per share by the end of 2025. However, if you have followed my channel for some time, I think you would know by now that I'm an advocate for not just taking management's word at face value and to dig a little bit deeper. And I think we can really do that by understanding the metrics that drive the fundamental growth of the business. It is because when we understand these metrics, we are able to determine and assess for ourselves whether or not this company has the potential to achieve all that management has set out to do. But as always, potential is a dangerous word, so let's dive in. Now, as with most of my valuation videos, I actually like to start by talking about SOFI's member growth because I really believe that this is one of the key growth drivers for their business going forward along with products. But fundamentally, I think if you ask me, all of this start from member growth because it is the members that use multiple products which ultimately generates revenue for the company. So if you have been paying attention to how management has been talking about the company during earnings call and fireside chats and things like that, you can see that the narrative around SOFI is shifting back to a re-accelerating of revenue growth. Now, SOFI can actually do that in three main ways. They do that by increasing their member count. They can actually do that by increasing the number of products, and at the same time they can also increase the revenue generated per product. Now, to see all of this in action, I want to reference a couple of points over the last couple of earnings call and fireside chats. Now, in the most recent earnings call, we can actually see that home loans and student loans actually saw their best ever quarter. And so as SOFI continues to ramp up originations, this will bring more and more new members onto their platform, and that is SOFI pulling the first lever of member growth to generate revenue. But last year, Chris Lapointe actually said that SOFI is actually under-monetized in their lending segment because only 2% of all SOFI members are actually taking up a home loan with them. And so the opportunity to actually cross-sell existing members without additional acquisition costs increases the number of products per member, and that is lever number 2. And then we actually also hear from Anthony Noto that in the financial services segment, while everyone has been focusing on the loan platform business, which definitely will drive up revenue per product, right? I'm not going to repeat that point again because this is something I've covered in a couple of my previous videos, which I will link over here. But there is huge untapped potential in purely just SOFI Invest. And so as people transact more and more on the platform, this will also increase the revenue generated through SOFI Invest, which, like I said earlier, is lever number 3. And so to me, this is exciting because if you listen to what he says, he actually told us during the Bank of America fireside chat that we have over 10 million members now. But you can see how many products we have in Invest. Now, I'm going to pull it up over here so that you can see. SOFI Invest actually only grew 6% year over year last year, and they only have 2.5 million products. And Anthony Noto himself is telling us that this has the potential to become as big as SOFI Money, which is at around 5 million products, growing at 51% year over year. And so for me, the part that doesn't really add up is SOFI's guidance for 2.8 million new members added onto their platform in 2025. Because 2.8 million new members basically averages out to around 700,000 new members added per quarter throughout the whole year. Now, I do think that it is possible that due to seasonality in the first quarter of 2025, that we see a net increase in member count of only 700,000 in Q1 2025, which means that after removing all the inactive accounts, we still see 700,000 new accounts added. But that would represent a 7% year-over-year growth and a 7% quarter-over-quarter growth, as well as a 33% year-over-year growth, which is more or less in line with current trends, right? But beyond that, it doesn't really make sense if we persist with these 700,000 members added per quarter, because the growth rate for members would just fall off the cliff. And I think a more reasonable assumption would be 750 to 800,000 net new members, because even using this number, 750 to 800,000 net new members, that actually only amounts up to a 32% year-over-year growth, which still represents represents a slowdown to where they were last year. And so that will actually minimally take SOFI all the way to the 3 to 3.2 million members mark. But even then, when I ran the valuation with the 2.8 million members that SOFI guided for, the results are actually pretty surprising, but more on that in a bit. Because on top of this, I came across another post on X over here that seeing how the average viewership for TGL is actually around 810,000, which is quite surprising because I personally I'm not really interested in golf, so I can't profess to have watched it. But ESPN were expecting close to around 500,000 viewers. So while I'm aware about some of the controversy around TGL and how it was set up, being I think Tiger Woods has some company that is sponsoring a certain product that they are using that is not very good and things like that, and how people say it's actually not real golf, I think the numbers prove that from an entertainment perspective it makes sense. Now at the same time, we can actually also see that institutional ownership of SOFI is going up. That will actually bring more interest into the company, and that is good from a stock price perspective. For those of you who have watched my valuation videos in the past, you might be familiar with this page over here. This is basically my per member analysis, and the premise over here is that SOFI grows their business by pulling on the three levers that I was mentioning earlier, which is member growth, number of products used, as well as revenue per product. So very quickly, for those who are seeing this for the first or even second time and you're not exactly sure what is happening, basically the top line number that you see over here, this represents the total number of SOFI members. Now the next line below basically shows you the average number of product that each of these member uses. Now Anthony Noto has actually previously told us that these products per member number should stay in the 1.5 range at least until the end of 2024. Now, I do think that we need some clarity about whether or not this is going to expand going forward. He didn't specifically say so, but if you read between the lines about what they talk about in terms of their hope to drive revenue growth, a lot of their strategy in order to drive growth is very inward looking to cross-sell home loans to existing members, as well as onboarding existing members into their SOFI Invest platform. So I do expect to see this number increase over time. Now, these two numbers, right, which is SOFI, the total number of SOFI's members, when you multiply that by the number of products that each member uses, you get the total number of product, right? And then you multiply that once again with the revenue generated by each product, which is the line over here, you get the overall revenue for that quarter. And so we do the same thing with the tech platform that you see over here. This is more straightforward. We just apply a growth multiple to the revenue. And so I want us to pay very quick attention to the top over here. You can see the word switch as well as sentiment. So the number in the switch over here will basically allow us to change the sentiment. And this basically corresponds to the box at the bottom, right? So if you take a look at this box at the bottom, if we have switch 2, which is the base case, the values that we are going to use actually is over here, which actually corresponds to the base case assumption. So if you listen to SOFI's management talk about their business, I think what I've realized is that, their business is way too dynamic for this current version of my per member analysis table. Because right now what we're doing is that we're assuming a base case throughout the entire vertical of SOFI's business. But actually, if we take a look at their business, the real growth driver in 2025 will be their financial services and lending platform. And the tech platform will only be a bigger part of revenues in 2026. And I need to adjust this whole model to incorporate that. But for now, what I'll do is I'll manually key in the numbers and we can see where that gets us. I think what actually surprised me is that even at 2.8 million members added, the financials were actually still pretty decent. And I think what this really shows me is that SOFI's revenue growth is actually pretty robust. Yes, they have 3 levers to pull to generate revenue growth, but they are not overly reliant on any one of these levers. So should a time come when any one of these levers become not as effective, they still have 2 other levers to rely on. Now, in this first case, basically, we are assuming in terms of member growth, 2.8 million members added in the entirety of 2025, which amounts up to 700,000 members per quarter. Products per member will be 1.6 products per member in Q1 and Q2. This will increase in the second half of the year to 1.48. Now, the assumption over here also is that the unit economics in terms of the revenue per product stays the same, even as they onboard more partners into their loan platform business. So the loan platform business, we can actually see over here, right? It actually pushed up the lending and financial services revenue per product into the mid $40 range. And so what we'll be doing is to be assuming a $45 revenue per product throughout the year with net income margins of 10% throughout the whole year. Now, if we assume a 5% dilution, they would end the year with a 31-cent EPS. And all of this is while the tech platform is only growing at 7% year over year. Now, if we take a look at the multiples, SOFI is currently trading at a 95 times PE ratio and a forward PE ratio of around 68.5 times. So if we were to just apply a 70 times PE to their end of year estimated 31-cent EPS, we get a price target of around $21.73 by the end of the year. Now, if you consider that, we actually opened on 2nd January at $15, that would represent a 1-year return of 45%, which is not too bad, but that is not all. Because if you take it a step further, let's consider as well the price to sales ratio, because SOFI just turned profitable, right? And that is, if you compare it to other fintechs like Upstart and Affirm and Robinhood, you will realize that the average price to sales ratio over there is around 13 times. But if SOFI is just trading at a 10 times price to sales, that would actually take the stock all the way up to $29.48. So if you take the average of the result that you get using the price to sales as well as the PE ratio, what you get is that SOFI has an average price target in 2025 of around $25.60. But that's not yet the end of the story, because as Tanner pointed out, and I double checked with the Bank of America fireside chat transcript, when they asked Noto about SOFI's members, they actually referenced SOFI getting to 14 million members, which means they actually assume 3.9 million members added, and that is much closer to my own estimates of 3.5 to 3.8 million members added in 2025. Now, in general, I think to me this just seems like a more reasonable expectation for the trajectory of the business, unless SOFI intentionally chooses not to grow members and to monetize the other areas of their business, which then I would expect to see huge changes in those metrics. But it really wouldn't make sense to me, because slowing down on member growth is a move that they would make if they were trying to optimize for profitability. But since that they have already told us that the focus going forward is to actually drive revenue growth, then they should be aggressively driving member growth at the same time. And this is important to my SOFI thesis, because I really do believe that the reason why SOFI is trading at a lower multiple compared to its peers is the perception that SOFI is just a bank, and they need to be able to show a revenue growth that is apart from their balance sheet in order to break free from that perception. Now, to me, the tech platform represents one such way for them to do that. It not only expands their total addressable market, but gives them the ability to scale a revenue stream that is not dependent on their balance sheet. But like I said, that is not the only way for them to do that, because their loan platform business, which they just got into, provides them one such alternative revenue streams. And on top of that, it actually brings them a whole new credit box of customers that might not have qualified for a SOFI loan previously. But now, because they can originate the loan on behalf of their partners, these people can take a loan through SOFI with one of SOFI's partners and still tap into SOFI's ecosystem as a SOFI member. And so because of that, I do expect the member growth to come in strong for the year, as long as SOFI stops playing with one hand tied behind their back. And so looking ahead, I think the assumption is that there will be a total of 13.5 million SOFI members on their platform by the end of 2025. Now, in terms of products per member, this will increase from 1.46 all the way to 1.5 throughout the whole year, where revenue per product stays the same at around $45, and tech platform will only grow at 7% year over year throughout the entirety of 2025. Now, if you just assume an 11% net margin, you get to an EPS of around 34 cents, which would put the 2025 price target based on EPS at $23.46. Now, on a price to sales basis, if you use a 10 times price to sales, SOFI could actually reach $30.46, which is a double from where it was on the 2nd of January 2025. But on average, if you take the average of these two numbers, SOFI should come in at around $26.96. And that would represent an 80% move in the year. And this is what I would really like to see in terms of valuation. Because when we look at the financials, as we have done in the previous video, we compare it with a ground-up metrics that drive the business, and you get a similar price target. It's like what I said earlier, right? It really shows me that management is in control of the business. But again, this is largely driven by lending and financial services revenue, which means that these are the two verticals of the business that management has the greatest control and understanding over. But that still doesn't distract me from the fact that I'm still hoping to see their tech platform play a bigger role in their business rather than just, become a cost saver over time. But again, I think the nuance over here is that this is largely driven by their lending and financial services revenue, which means that these are the two business verticals that management has the greatest control and understanding over. But that doesn't distract from the fact, that I'm really still hoping that SOFI can continue to grow their tech platform and for their tech platform to play a bigger role in their business rather than become just a cost-saving tool over time. And so to me, if they can actually scale their tech platform, it's not going to be surprising to me if the market rewards them with a higher multiple. Even if we just take the average price to sales multiple of 13 times, which is what other financial companies are trading at, then the high end of the price target moves up to around $39.60. And so because of that, the average price target for SOFI would also move up to $31.53. And I think this really falls in line with my understanding at the start of the year, because in that video, I also said that I wouldn't be surprised to see SOFI actually getting to $30 per share and at the very least breaking their all-time high sometime this year. And so what this whole valuation process has proven to me is that the destination hasn't changed, but the journey to the destination has changed. And our job as investors is to decide whether or not this new journey, this new path that they are on is really for us. But on a personal note, this actually makes me a little bit more bullish about the company, because if they are able to achieve all that they have set out to do without the tech platform, imagine what happens in 2026 when they incorporate in the revenue of the tech platform. And with that, I'll see you in the next one.